in this room full of and pretty much gave my first pitch to Steve, to Rick, to the rest of the team, and it was history from there. It was an instant hit. I know I'm not around the market centers much in person, but I'm always available. My cell phone's on every single business card. My office operates from 9 to 6. We have 5 locations throughout the state of Connecticut, 5 retail offices, Stamford, Norwalk, Bridgeport, New Haven, and Britain. I have a homeowner team that dedicates only to homeowners insurance, flood insurance, and anything property related, whether there's a residential property, single family home, or you have your savvy investor jumping into their 20th property they're flipping or holding on to. We can manage them all. I've been in business going on 18 years. This September 2nd, I opened my doors in September 2nd, 2003. So we're very excited to be able to vote, not drink yet as a company, but we'll be able to vote. Looking forward to that 21-year anniversary so the whole office can go drinking every day of Donna's house. We're family owned and operated. We use technology as an ease of doing business. However, it's all personal. Whether it's with you directly as our partner or your client, we want to bring value to the table. There is no such thing as cookie cutter insurance, basic insurance, or full coverage, or the complete deal. The reality is the insurance companies, especially nowadays with technology, are being very specific as to how they rate risk, what kind of coverages they give. It's all about the fine print with them. They want to make it look good to you as a consumer. They want to market their product in an amazing way. However, it's full of fine print exclusions, and that's when you need a professional. Okay?
Can I interject here, Fabian?
Yes.
I use your agency, and you guys, I don't know if anybody knows this, but I got insurance on my baseball cards to you guys.
That's right.
I mean, just bizarre stuff like that. I mean, so.
Thank you, Jim. Thank you. And that's what we're all about. We want to be able to customize coverage to meet your needs. We want to be able to customize coverage to meet protect your house properly. And we want to advise you and give you information that's valuable. If we don't have a conversation with our clients about what they have at home, etc., we could miss the ball. And then they can have a claim and lose thousands of dollars. Insurance is the type of industry where if you don't spend an extra 5 minutes on the phone with an agent or actually work with an agent and probably spend $60 extra a year on your policy, you could suffer thousands of dollars, if not hundreds of thousands of dollars in losses. And I'll get to that in just a second. How do you do business with me? I have the 2 preferred methods is you do an email introduction with your client on the email, introducing us as an option to work with. 2, text introduction with me on the text. You can text me directly. I will then do the initial client consultation immediately. I'll reply to the email, I'll reply to the text, and I'll do the initial contact with the customer. And then I'll pass it off to my homeowner team because I can't do everything. So my primary job is to make an initial contact, do a consultation, and then I pass the work on to my team. My team then gets back to the client, emails them a quote, contacts them, goes over details, emails you, the mortgage broker, attorney, whoever else needs to be involved in the transaction. So it's very, very easy. I'll share my contact info for those on Zoom via email with Adonis, and obviously those in person have my contact info. So it's very easy to do business with me. Second, as your partner, I want to bring value to the table. We're not pushing with sales. We don't sit there with customers and try to pitch a sale or get them to pay or hook them into anything. We give them information. We bring value to the table. We offer options. For you as our partner, call us. You show in a property, needs flood insurance, we can give you some advice as to what kind of flood insurance is needed based on the loan type. If the clients have FHA versus conventional, they're going to have 2 different needs for flood insurance. We know how to have that conversation with the customer up front to understand their options. If you see a property in distressed conditions, close to the coast, or you see anything that may draw an insurance issue, call me. There's no fee in talking to me. I wish there was. I spent all day on the phone, but I want to be able to be resourceful to you. Insurance is the type of thing where if you miss one thing, it can blow up at the end, kill your deal, or just drag things along in the wrong direction. Or it could be very smooth and very cookie cutter, but you want to be able to cover your ground up front. That's why I'm here. Call me, text me, email me questions, see if you need to know anything about a property being in a flood zone or not. More than ever, with this aggressive market, you're seeing houses that wouldn't normally sell in a regular market, right? Because they're hard sell, especially those properties with high flood insurance premiums, special conditions, etc. So now more than ever, I'm spending time consulting our realtor partners in regards to properties with these conditions. Usually it's flood, distress conditions. I'm seeing a lot of odd things, like a single family house with two separate dwellings, the two separate dwellings needing flood insurance. You call Geico, they don't know what to do because that's not scripted. You call most franchise agencies, they don't have a script to handle that type of situation, only experience and obviously someone local that knows the territory will know how to manage that. So that's what we bring to the table. Just like you don't advise your customer to go to Quicken Loans and Rocket Mortgage because you know the consequences of the clients doing that, it's the same concept with insurance. Have them work with someone local, hopefully it's me, hopefully the agent is as good looking as me. If not, it's okay. But you want to work with a local agent. All right, guys? Let's kick off to a topic that's hot in everyone's head. Flood. What just happened last Thursday, a week ago? I was going crazy in the office. I mean, I probably got over 300 phone calls between Thursday afternoon and Friday at the end of the day, and another 300 between Saturday and Monday, all regarding flood, okay? And I'm gonna kick off with that because it's very important for you to understand. Flood insurance is not covered by your homeowner's insurance. So any type of flood is not covered. Any type of water penetrating or going into the property in any way, shape, or form will not be covered. People think it's just what we think, close to the coast, right? Being on the sound, or next to a lake, or next to a river. That's not necessarily true. You have a lot of areas that have low, the sea level is low. They have creeks that you don't see. They have underwater systems that create flooding, and therefore these houses may be on a flood zone. Rainwater penetrating through the foundation is considered flood, is considered water sweepage, and home insurance will have nothing to do. Most people are forced to get flood insurance. It's not something optional, because if they're in a flood zone, that's going to raise red flags, starting with you, the realtor, the minute you show the property. And obviously the lender has to calculate that extra cost, because it will be a second policy into the loan, right, in the DTIs. So if you have a client looking at properties at the top of their budget, the flood insurance could kill the deal and could make things difficult. So you want to address that up front. So they're forced to get flood insurance to get a loan if the house is in a flood zone. However, I always advise realtors and clients that it's okay to purchase flood insurance on properties that are not in a flood zone if the house has had any history of flooding, has had any history of water sweepage due to the age of the home, the type of foundation. It's just simply the way the water is channeled outside of the house. You may want to consider having your clients get flood insurance. If the house is not in a flood zone, they tend to be what we call preferred flood zones. The price is drastically low compared to a house that's in a flood. Now, flood insurance is very tricky because it works nothing like regular insurance, okay? If there is a flood, the primary coverage on a flood, and 99% of the people only take structural coverage. So the flood insurance policy will only cover flood damage to the primary structure, no remediation. No remediation. That's very important for you guys to understand, because the one of the costs and one of the things most customers are going to look for is remediation, removing the water out of the basement, drying the basement, getting the moisture out, getting the mold out, which usually a company like Surf Pro, a company of that kind that has the right machinery, can be very efficient. But unfortunately, flood insurance is not going to cover remediation. It's only going to cover direct damage to the structure. Second, unfortunately, most people in most houses, unless you're right on the water and you know the house floods every now and then, most people don't take contents coverage. That's just how it is. Even if I pitch it all the time. No, I want the cheapest. You know, my mortgage broker just to take the minimum, the $250,000, then have to make changes later. Most people don't make changes later because they don't see the need until they have a problem. So if contents is not covered unless it's added onto the policy, most mortgage brokers want to stay away from that in the process of getting the loan. But the client can always make a change after and add it on. We always offer it to clients that way. However, if you don't have contents coverage, they won't cover the mechanicals, which is the second thing that happens when water gets in the basement. Your mechanicals get automatically, damaged, or they're no longer in the same working conditions as the water getting into them. So you want to be mindful of always advising your customers to speak to a professional about options, because most people are calling us, you know what, I got the water out, no problem, but my boiler went out. My multi-family houses, my 3 boilers are just completely, under 1 feet of water. They don't have contents coverage, there's nothing we can do, okay? So keep that in mind. We're talking about flood and showing a client a home, especially an investor. If you have an investor that gets water in a basement and 3 heating units go out, that's 7 times 3, right? An average cost to replace the furnace and all that, between $5,000 to $7,000 on the lower end. That's $21,000 that will be out of pocket. Okay. We advise clients anytime they have a claim. We jump in, we give them advice, we help them, we walk them through the process, and then we have them make a final decision whether they want to proceed with a claim or not. It's not smart to file claims without consulting your insurance agent, your local insurance agent, not the 800 number, because a lot of times people just need guidance, need advice. Sorry, guys. Just need guidance, they need advice. They need options. Then after that all is taken care of, they can officially put in a claim. Why? In big corporate America is not going to tell you this, the Geicos, the State Farms of the world, the minute you call in a claim and you're on a recorded line, they have to file a claim. Even if you're just calling to ask questions. I had a water in my basement. My gutter flew off with the windstorm. Do you guys cover tree cleanup? My yard looks like Armageddon, right? And the answer to that is yes, but get an estimate first, get it cleaned up, save the receipts. Let's see if this is worth reporting a claim. Because the minute you put in a claim, your rate usually doubles, triples, or even the company has the right to drop it. Why? Homeowners insurance is priced very low compared to the amount of coverage and risk the company takes on. So the minute you have a claim, they just rate you at a high risk. Doesn't matter if they pay out $200,000 or they pay out $0. The minute you go in as a file a claim, now you go in as a high risk factor client, and they will factor that into your premium. So it will either double, we see most of the time at a minimum double, triple, or the company will write out $200,000 check, make you the happiest customer in the world, and then say, I'm sorry, we're not going to renew you because you no longer fit our profile preferred customer. We can no longer give you a preferred rate. Okay, so that happens, it's normal. People usually get pissed off by the time, that's just the nature of the business. Also, statistics show that when someone gets paid on a claim, there's a higher chance they'll file a second claim within 5 years. Why? They already saw the benefit of getting paid anywhere between $10,000, $100,000, and it's just by nature, or statistics just show people make a second claim, so the company doesn't want to stay on the books for the second payout. All right? You had a question?
No, say that's regards to natural disaster, not even homeowners.
So national disasters are a little bit different. Yeah. If they consider a CAT claim, which has to be federally, it's an insurance term, then we will make an exception. It won't count against you. Thank you. And that's on a state by state basis, and also company. The company has to declare a CAT, and they declare a CAT based on whatever the state says the storm is, if it's a named storm or what kind of storm it is. Gets a little bit more detailed, but great question. We can't forgive CAT claims. Outside this point, I don't think has been considered a CAT claim yet in Connecticut with most carriers. Yeah, the state usually pushes the carriers a certain limit to do it. It's all corporate, you know, insurance companies lobby huge in the state to get their way. The state usually fights with customers, and sometimes they don't. So, you know, that's why you need a local professional. Homeowners insurance. Homeowners insurance, three quick things I like to clear. It's not designed to cover the loan. It's not designed to cover the market value of the home. And it's not designed to cover the purchase value of the home. The primary purpose of homeowners insurance is to provide protection for the customer and the asset, the home. And the protections given at a replacement cost basis. That means that we insure houses at their full rebuild value, full replacement value. So a lot of times when I speak to you guys, the house is worth $500,000. Here's the address. Can you give me a rate? The house could be worth $5 million. The house could be worth $500,000. The land value, that's always going to be there for the insured. We're going to only cover the structure, the rebuild value. So no matter how much their house is worth, the day they bought it, or God forbid, the day they had a claim where their property drastically went down in value or higher in value, we will always guarantee to rebuild their home.
Sorry to cut back. I was thinking about it. So you're talking basic flood insurance. So let's say, obviously, there's an additional cost for the mechanicals and everything else. But does that basic, if you have a finished basement, is that covering the, the furring strips on the exterior wall, the hardwood floors, what?
Ernie, that's a great question. We ask a lot of questions because sometimes the customers get mad. I don't have time. I'm on my lunch break. I run on Wall Street. I work on Wall Street, or I'm on my shift. We have to ask all these questions. Is your basement finished? How much is it finished? Where are your mechanicals? Things of that nature. So the answer to that is yes. And on homeowners and flood insurance, and for general insurance, we like to set up the insurance the way the house is. We really don't get involved with permits. So if your customer has a finished basement and they bought the house like that, but it was not, permits were not pulled for the finished area, I will put my homeowner's insurance as a finished basement, even though I know the city has it as a non-finished. I will put the flood insurance as a finished basement. So when they have a claim, the policy is properly rated to pay out that damages. The details of the contractor to rebuild the city, that's something completely out of my hands, but we're going to put the coverage in place. Good question. Did that answer? Yeah. Perfect. I forgot to mention something. Flood insurance used to not be competitive. Used to be only one flood platform, which was FEMA. Okay. FEMA went completely underwater in the way they were able to get out of going bankrupt for higher in our taxes.
See what you did there, went underwater?
Yeah, I like that. They partnered up with Lloyd's of London, the biggest insurer in the world, and they came up as a partner with a private market that's competitive. FEMA still has stake on it, but it's like 49%, and then Lloyd's of London has 51%. So there used to be only two markets, FEMA and private through Lloyd's of London, only two prices. Then the private market got crazy and people started, within the private market, the different subsidiaries of Lloyd's of London started competing. So now my agency represents all the private markets in the state of Connecticut, which there are about 4. The prices don't range much, but there are some price difference depending on the appetite of each reinsurer. And then FEMA. Quickly, if your client's getting an FHA loan, they can go with FEMA the first year, and then they can switch over to a private within the next year. We have had 100% success rate in switching people over from FEMA to private, never had an issue. The only time we have an issue is when a small local bank issues an FHA loan, or simply just a small local bank, meaning they lend out their own money, they don't sell the loan, they don't sell the service, they stay on it for everything. That's the only time we see that the FHA has to stick through a long period of time. Most consumers go through your traditional mortgage brokers and mortgage companies that are, like Loan Depot. We have Guaranteed Rate. We have Westport Mortgage. All of our partners allow to go FHA, FEMA first, and then switch over to private. I don't want to name the banks. Only like 1 or 2 banks in the whole state that actually lend their own money, service their own loans. They don't sell anything. They're like literally. Their team here in Connecticut is managing the whole loan from the whole 30 years. Those are usually the ones that don't allow the change. But it's a great pitch if you have a customer concerned about the cost of flood insurance. Just tell them the first year is kind of like the cost of doing business, like a closing cost for the FEMA policy, and to calculate their long-term mortgage payments and costs based on the private mortgage flood insurance. I've saved many of deals where clients were ready to walk off once they found out their whole flood insurance was going to be $300, $400, $280, $250 a month. It's a big difference. Where we were able to talk to the client, the lender, the realtor, have a conference call, and we educate them on both products, pricing point, how their mortgage is going to go down. We tell them that we help them. We can't guarantee anything, but we tell them that we help them call the mortgage company, recalculate their escrow, recalculate the mortgage payment to the lower premium on the flood insurance. And usually people feel confident. You send it in writing? Yeah, we send it in writing. We have a 100% success rate, and we know when we can do it. Only when we see 1 or 2 banks, we say no, because we know the way they operate here in Connecticut. All right, guys? Yes.
Just had a quick question on the replacement cost item you said. I actually had a seller ask me about this a few weeks ago. If they had an expansion on their house that was not recorded or permitted or CO'd, and it's not reflected in the town's field card, would the replacement cost only be up to the field card reflection of the house or the actual constructed?
We go based on our underwriting, our own underwriting. So if the customers, if I see that the house, we always ask questions that we know can change things based on what we see on the MLS, on Realtor.com, on the city cards, on the tax records, on the building, because we know people do things to their house, right? So the answer to that is no. We don't go by the field card. We don't go by Realtor.com. We don't go by the MLS. We go by our own research and asking the customer questions. And we do ask if they're finished basement. And when most people go, I already know, when they hesitate 1 second, don't worry. If it's not a legal basement, or if you don't have the permits, it's all right. I need to know, so if there's a fire, something happens, that the basement finished, and we can put the right amount of coverage to at least pay you out for the finished area.
Gotcha. Okay.
Or calculate the risk properly. Let's say a fire starts in the basement. And due to a living condition of the basement, even if it's just a family room, and the insurance has it as a non-finished basement. Now we have a coverage issue, we have a rating issue, we have an underwriting issue. The insurance companies will find any reason to get out of a claim. Not paying a claim makes them money. So that's my job, to always protect the customer, so the day they have a claim, we are going back for the customer, not the insurance company. I bought it back for my customers. You're not going to get that from Geico. You're not going to get that from the franchises, because they represent the company. They're agents of the company. They can't even advise the customer something ethical if it goes against the company. They can't also misguide them, but they can't also guide them. You get it? In insurance, accounting, very detailed things, you need guidance. You need a professional to tell you what's the advice you of options. Agents cannot do that. Brokers can't. So if you don't pay extra for a broker, there's no extra fee, there's no extra premium. You actually get the benefit of someone shopping around in the market for you, representing your interests. So a broker, I have done it. I had a client in Westport, long story short, tree fell on their house. Insurance was ready to settle with the husband, which knew nothing about talking to an insurance company, for $37,000. The wife flew from out of the country, saw the whole mess. met with contractors. She was the savvy one. She moved. She called me upset. How can you guys offer me $37,000 for this job? Look at the comparing estimates, look at the pictures. I said, ma'am, I am furious as you are. Let me call the claim adjuster. Spoke to the claim adjuster. He was not willing to do anything. I hung up with him. I said, have a good day. I advised my customer to speak to a licensed claim adjuster, told him the issue, stepped in the middle. Client got awarded $120-something thousand from a $37,000 initial offer. And this is all insurance companies. Their Chubb is not the best, Progressive's not the best. They handle each claim, each case, each claim adjuster is going to manage each situation a little different. A claim adjuster that's, let's say, underwater and his numbers from paying out claims is going to be harder because they're, so just like salespeople, right? You guys are cappers, you guys have goals, you work towards those goals. The claims adjusters have goals to keep their payouts at a certain amount. So if they go over their amount, now they're holding on to claims, they're budging, they don't want to pay. It's just an industry standard. They're taught to be like that. So it's our job to say, hey, we don't like that. We're gonna get somebody to, officially get you on the right track and pay the client's claims. All right, guys. So insurance is very detailed, and it's not until you have a claim until you value it. It's not until you have a claim. So that's what we work for. On my way here, we had to email a policy for signatures because the company was trying to play hardball. So now they want to see signatures. They want to make sure a policy that was written in 2016 that we have the signatures on file so they can come, like, yep, we have the signatures on file. Everything's taken care of. Please pay the claim. They'll try to find anything if they want to. So that's when we come in. No worries. We don't care about the field card. We care about the actual risk itself, its current risk factor. Okay. Replacement value is very simple. It's just like a builder will calculate it. Square footage, year build, type of construction, materials. My team is trained to know, is this rings end? Is this a custom roof? Is this a custom house? Or is this, one of those prefab homes that are very cheap to build? And is this house has certain type of materials that is very easily accessible and very inexpensive at Home Depot? Or does this client have, $20 a square foot tile from Tile America? We're trained to have that kind of eye, research these type of things and issue the right coverage. I have a house we're insuring. Some agent, quick franchise agency, insured it for $740,000, like a 7,000 square foot home, all custom built, not medium to high end finishes. No other company will issue it for less than 1.2 million in replacement cost. And the client said, well, I'm going to go with them. So your house is highly underinsured. There's no, call a builder and ask him, will he rebuild this house for this amount of square footage? And what's going to happen is the insurance company's the agent's going to issue the policy, but then the company's going to catch it in the back end and raise the premiums, raise the coverage, or cancel them for not, complying with the terms and conditions. So we do a lot of homework up front to make sure that the replacement cost is accurate. Okay, guys? So again, the dwelling coverage replacement cost does not reflect market value, purchase value, loan value, or appraised value. All right? Of course, in towns like Stanford, where land value is high, you have a 1,800 square foot home. It can cost $500,000, but we can insure and guarantee to rebuild it for $300,000. We go to Waterbury and we insure a 3-family house with full replacement costs. That can come up to $600,000 easily to rebuild a 4,000, 5,000 square foot, those large multifamilies in Waterbury versus the market value of the house could be 250, 300, right? They're very aggressive, right? So just keep that in mind. We don't care about market value. Homeowners insurance covers all your contents, furniture, clothing, appliances, your standard contents, your everyday items. Now, if you're like Jim that has a baseball card collection, we need to provide customized coverage. We call it scheduled property. So we'll get an appraisal, proof of purchase, proof that he actually has the item, and we'll add it on separately. You have a watch collector. You have someone that likes watches. You want to be able to insure your jewelry. Ladies, your engagement ring, your earrings, sneaker collection, you name it, we can customize coverage to protect it. One of the oddest things I have is a violin worth $250,000. I had a client in Greenwich that had a cross that was from sometime AD, I can't remember the years, like 1500, 1600 AD, have been passed down through generations. So, you know, we can customize the covers to meet their needs. We also give customers options where, I don't want to say bare minimums, we give them enough coverage to be protected, and then we can work on customizing their needs as it changes or after they close. A lot of times we do a lot of this customer coverage after closing, because we don't want the premiums and process of getting these items insured be involved in affect the closing process, right, or delay or become a headache.
So if you have homeowners insurance and then you have car insurance, let's say, you know, you have a house fire and then your cars are in the garage, what category does that fall under?
Car insurance. Car insurance. So, so personal property has to be furniture, clothing, appliances, household items. So if you have a boat in the garage, you need to make sure your boat is insured and it has full coverage. You have a motorcycle, car, good question, you have to make sure it's covered. Only like small things, like, you know, if you have one of those lawnmowers that you sit on, or like a small canoe, or things of that nature, kind of more like personal item. And certain companies insure golf carts. Some people live in golf cart communities or golf communities. Those kind of things are considered more personal property. A vehicle, a boat, a motorcycle, ATV, that's all separate. You will need to get separate. Snowmobile, you'll get separate coverage for that. Good question. Okay, guys. We don't need a list of things. I get asked that question when I go into details. Oh, do you need? No. I mean, if you tell me that you, in a house fire, you lost 3 $7,000 TVs and you don't have a receipt, and you don't have proof of purchase, and you don't remember where you bought it, obviously red flags for fraud. You tell me you got a $7,000 TV, you don't have the receipt, but you know you bought it in IKEA, not IKEA, Best Buy in Norwalk, or BC Richards in Norwalk, or across the street at the appliance store, then we believe you, then we can track the sale if we really want. Insurance companies have resources beyond what you think to verify information, especially now with technology. Okay, insurance companies now, I think, are the #1 purchasers of camera imaging on plates and other things to be able to settle claims. So the technology they're using lately has been cutting edge. Unfortunately, they try to use it more against you than for you, and you know, but it's there. But we can track things, and if things are fishy, that's when the insurance companies will push back. And I tell clients this all the time. I had clients that, oh, I have $12,000 worth of brand new stuff in that one room that had water come in. I'm like, okay, where are your receipts? Well, I don't have it. Oh, my gaming computer. You don't have receipts for a $3,000 gaming computer. You don't have receipts for a brand new.
They were all in that room.
All in that one room. So I'm like, you can file a claim, but I can tell you now, give you my advice. You have no receipts, no proof of purchase. You can't recall anything. You just know those items were lost on a large ticket number and supposedly mainly brand new. The insurance company is going to open up the fraud. So please, at least tell us the store, the year you bought it, that they can track at least 1 or 2, 3 of the items, so the rest of the claims will be smooth. If not, you're going to be in it for a long while. And they will stay on your record, you know, it's a fraudulent claim. We will report that. Okay. So we have structure, personal property. Third, we have loss of use, living expenses, and that's exactly what it is. We'll pay the cost of your living expenses if you cannot live in the house due to a covered claim. Flood is not a covered claim. Remember that. And flood does not remediate. They only pay directly structure and personal contents. They're not going to pay for you to live anywhere else. But homeowners insurance will pay for you to live anywhere else. You're an investor or you live in a multi-family home and you rent out the other unit, we will cover loss of rental income for covered claims or for covered perils. So COVID is not a covered claim. We didn't pay one claim. The insurance industry as a whole on a federal level, state to state, did not pay $1 towards any type of COVID related claim or loss. Commercial, residential, personal, okay? So keep that in mind. If you have a, excuse my language, a shitty tenant, doesn't want to pay, you have a dispute, insurance companies aren't going to pay loss of rental income for that. We're not. There's a fire, there's a theft, there's vandalism, wind, hail, hurricane, the pipes freeze and they burst, tree falls on top of the house. You have hail, hail's very destructive. These are your common damages. Animals can destroy. I had a client who didn't know our family raccoons was in the attic and damaged a lot of things. They got some mechanicals up there. So we will cover all these things. If that interrupts your living, you living in the house or collecting rent, we will cover it. Okay, guys? For those clients that are investors or have tenants living in their owner occupied, make sure your tenants get renter's insurance. It's about $190 a year. It's not $100, not $150. Okay, inflation has kicked in, right? I think it's safe to say that. So renter's insurance is between like on the lower end, like $180 to $200 a year. It's still at $17 a month. Okay, that will give the tenant all the protection they need for their living expenses, contents, and you are protected. If you're sued and the tenant's liable, you can transfer the liability to the tenant. If not, you're absorbed. Okay, something very important to advise people with multifamilies or investors. I'm seeing a lot of people buying second homes and multifamily, taking advantage of the strong real estate market out here. Advice: when are they going to be sorry? When they have a claim, when they have an issue. Make sure they have leases. Insurance companies verify when there's a claim and there's a tenant involved in a claim. The first thing they ask for is leases, terms and conditions in which both parties enter. You don't have that, now there's a can of open wounds. Okay, anything can go in anyone's way. The insurance can pull their way, the tenant, the landlord, and then it gets a little messy. So just make sure everyone has leases. For insurance is very important. Since I'm talking about lawsuits, liability is your other coverage. Liability covers slip and falls, dog bites, trampoline falls, someone drowns in your pool, etc. So obviously the first thing I do is ask someone, do you have a trampoline? Do you have a dog? Do you have a pool? Do you have a pool? Is there a diving board? All these things affect the insurance. All companies look at these risks differently. I have companies that built into their rate, as long as you disclose there's a trampoline, they don't surge charge. But their cost of doing business is already big. That means this company's a little smart. These are mostly the newer companies. They're like, okay, someone can buy a house, not have a trampoline, 2 years later, put it on. Someone trips and falls, and now we're in a gray area. So they build it into their rate that they'll take anyone with a trampoline at the same rate, as long as they disclose it. Same thing with pools. Most companies don't surge charge for pools, but it's built into the rate. They will surge charge for diving boards, heavily too. Trampolines, the companies, two things. They either surge charge for it, they all do, or exclude it. I prefer you surge charge someone than exclude coverage.
Is it higher for, I believe it's higher to get coverage for a trampoline than a pool, is that correct?
There's no surge charge for a pool, so you can have a large, beautiful $100,000 pool, deep pool,
Right.
And it will be the same price as you not having a pool for insurance. You have a trampoline, the rate can vary from 50% to 100%.
So that is.
Yes, while trampolines hold the largest amount of claims for bodily injury with no contest, meaning the companies can't fight it, especially in Connecticut. So even if your next door neighbor comes to your house uninvited while you're at work and they're walking around the neighborhood with nothing to do because they didn't go to summer camp, and they start jumping in a trampoline, skinny dipping in your pool, and one of those kids falls off the trampoline, gets hurt, we have to pay. Even if a kid is skinny dipping, drowns, say it was drunk, a 17-year-old kid drunk, jumped into a pool at 2 a.m. when you're on vacation and all of a sudden they find him dead, most likely the insurance is gonna have to pay. So when it comes to liability claims, very, very, very detailed information you have to put on a policy, make sure people are covered. If they tell me they have a dog, I have to disclose the breed. If you tell me, I don't know, it's a mix, I have to at least give me 1 or 2, So if there's a dog bite or situation, the company doesn't say, hey, we knew there was a dog, but we didn't know it was a Shih Tzu. We didn't know it was part pit, So little details matter when there's a claim. When I'm asking, I sound annoying, trust me, I know I did. But you wanna be careful. Liability here in the state of Connecticut is a big thing because it's the way the state sees it, the insurance company is pretty much on the hook for everything that happens on premises to protect you. Other states is different. New Mexico, you cross somebody's property line, they shoot you, it's your fault. Here you go to jail and you get sued. So that's the type of state we're in. Optional coverages, water backup. I don't make it optional, everyone gets it in my office. Okay, if you get a quote through our company, everyone gets water backup, sump pump failure. So going back to flooding, if the sewer line on your home, not the street, we can't be liable for what happens on the street, but if the sewer line that's on your property gets backed up and clogged and it causes water damage to your house, that's considered water backup, not flood. Homeowners insurance will pay. It's like an extra $60 to $100 a year depending. A lot of people like to be cheap and save $100. Guess what? You save $160 a year on a water backup coverage. Water backs up into a finished basement. Now you have a $30,000 bill in your hands that insurance would have covered. You would have spent the extra dollar. So we always include it. I have people that go, oh, I got a quote with your company for this with Durango Insurance. With the same company of another agency, it's $100 less, $60 less. I automatically know it's the water backup, and I tell them what it is. Had a client go with a lower rate, call me 3 months later, his basement was underwater. Can I help him? I said, no, I can't help you. You went somewhere else and you didn't choose a cover. Lost $30,000. Because he then wanted to call me to help him switch the insurance. Like, I can't, you have an open claim. You already filed it, it's open, and it's nothing I can do at this point. So we can talk in a year, maybe, when the claim's closed. If now you have to wait 3 to 5 years, if the company's willing to stay on the books, right? Sump pump failure, big thing. So we paid out a lot of claims. If the client can prove that a sump pump failed, a plumber or a claim adjuster comes out right away, tests the pump, see it was burnt out, see the capability of being overflowed, we will pay out the claim for water backup and sump pump failure. So some people, even though they didn't have flood insurance, they weren't covered. But the company's picky. They're going to want to make sure your sump pump really failed or they can prove it to overflow. With these type of rates, we knew they overflow. There's some other coverages you can add. They're more on a custom basis. They're more on a needed basis. They're more based on the property, based on the client, based on many factors, especially investment properties. Clients have more options, but this is pretty much your core homeowners insurance. Okay, guys, and how it's made up. Premiums have gone up. Can anyone guess why premiums have gone up? Can anyone guess? Cost of materials went up. Cost of construction has gone up for the first time in almost 2 decades. So usually insurance keeps up with inflation at a rate of 2 to 5% for most. We have to adjust 15 to 25% due to the higher cost of construction, the longer period of construction, the lack of materials, and labor is going up also, right? Quality contractors are hard to come by nowadays. Everybody's remodeling their home, adding to it, etc. Right, especially here in Connecticut, so many New Yorkers came in, they're saturating our market from all types of resources, from contractors to camps for kids, they're all full. So keep that in mind, insurance rates have gone up for the first time in about 10 to plus years as a whole, as an industry, due to this, and it's normal, okay? Always advise your customers to pay insurance in full for the year ahead of time, 7 to 10 days prior to closing. Why? Payment on closings is possible, we do them all the time. However, one, the customer gets their money back. So always let them know that you can pay your insurance ahead of time, 7 to 10 days prior to closing. Don't worry, you pay your insurance, you don't close, or even if you don't want to keep the policy a month after, if they don't close, they get 100% their money back. If they close and use the insurance for 1 month, which I don't like to say, but if they use the insurance for 1 month, we will refund them retroactively. They pay 12 months, they use one, we refund the 11, so they lose no money. So they don't lose money whether they don't close, or they don't lose money whether they switch, okay? But it's better that they pay up front for many reasons. If we invoice the insurance at closing and it passes 10 business days, the company has a legal right to cancel that policy. They don't, because you work with billing, you work with the system. My team spends a lot of time keeping policies active that haven't been paid or haven't closed yet. But the company could cancel. They have the right to. Second, a non-paid policy is subject to change. So the policy can change in premium. The company can go out and inspect the house, and let's say the closing got pushed back, the company finds high-risk items, and now they want to cancel and not stay on the policy. And even if we tell them, hey, the client hasn't closed yet, this is going to be addressed once they close, or even prior to closing, they're not going to care. They're going to say, no, we're not going to honor that. We can't even change the closing date now. We're restricted as to now the new proof of insurance. The mortgage broker's going to be calling upset. Why are you not sending me a binder updated with a new closing date? Why is the policy canceling? You guys suck. And it's not that. It's just the company has every right to do all these things. Third, the pushbacks to the closings are very popular now. You know, a lot of people are closing fast. Most are not. And if we issued a policy on July 15th and they truly close on August 5th, the company's now behind 20 days on billing. They could cancel. To issue a new policy, I need underwriting approval. That may delay the closing because they need the updated binder. Third, people close with expired documents. So most people, the rule is, which is not a rule, but most people think, oh, it's less than 30 days, we can use it for closing. You can use it for closing, but you're truly using an expired document in a non-bindable contract to the insurance company. That could create issues in a cancellation, even a claim. Third, if the check gets lost or delayed after the closing and there's a fire, great justification for our company to say, we don't want to afford coverage because they went beyond their cancellation date. They had a claim, we're not going to honor payment. When there's no claims, we have customers sign a document. Please sign here that you haven't had any claims. We're going to make a special reinstatement on your policy. But guess the conversation I had with the customer by that point. Customer's furious, why is my policy canceled? They think it's all, you guys are insolvent, how can you let my policy cancel? I'm like, I want to, trust me, I want to get paid as much as I don't want to cost you a headache. Then, you know, I'm a team player, I try to have a conversation with them to make it look like it's just an error overall. The reality is the checks get lost, they get delayed, they get mailed to the wrong place. We get checks written to Durango Insurance, but mailed to the company, or vice versa. They'll mail the check over to my office in the name of the company, and I can't do nothing with that. It's just things that happen. There's no right or wrong, but you try to avoid them by having the client pay up front. If there's a seller's credit or a special condition, we'll be happy to do the payment at closing. We do get involved with the attorney ahead of time. A binder is a legal insurance contract, so a lot of mortgage brokers and real estate professionals think, well, just send me the binder. And they think because they haven't closed, the binder's not a policy or an effect or valid. No, it is. You haven't closed, but the insurance company has a valid contract in place. So just keep that in mind. We do everything from condo insurance, renters insurance, auto, home. We're doing tons of small businesses. I would say since the pandemic, obviously homeowners insurance has skyrocketed. And then also small business insurance. A lot of people going into business for themselves, part-time, full-time. So we can do anything from a restaurant. We can insure a landlord. We're doing a lot of lesser risk landlord policies for strip malls, mixed-use properties. We love those. So we'll be happy to always cater to your needs. If I can't do something to you as my partner and to cater to your customers, I guide them in the right direction. I have a client who's in the middle of a closing goes, oh, I'm switching jobs, I need health insurance. I don't do health insurance, but here you go. I don't do life insurance or financial planning, but I have people. And I usually like to fit the customer with the best referral source, not my friend, not my in-house guy, not the guy that gives me a kickback. I line them up based on their needs with the right profession, okay? So we're all things insurance. I don't know if anyone has any questions.
I was asking Nelly if she had a question. I don't have any questions, just the cosign. I use Durango insurance on my house.
Thank you, Nelly's too, thank you. Me and Ernie's done some business, Jim, so we're here, we're your partners, we wanna work with you. Hello to everyone in Zoom, don't hesitate to call me or text me anytime. My number is 203-667-9953. You could easily find us on all social media platforms, Google, Durango Agency, Durango Insurance. As long as it's Connecticut, we should be the only one to pop up. So, thank you, everyone. Sorry I started a little late. I stood up, cooking all morning. So, I hope everyone enjoyed their lunch and thank you for your time. Thank you.
Are you committed?